Morning, guys. I hope you're all good, and hopefully you're having a wonderful trading week. So I just thought that I would do a simple introduction and just crash course for simple trading. You know, just so that people who are thinking about getting into forex trading have a general understanding of what's really happening and how they can work around it. Right. So hopefully all of you already know what trading is about, and I think the one thing that I would like to really key on is that trading is best when it's kept simple. So the simpler the clearer and the simpler your charts are, the better you get to see what you actually get to see how your charts are going to play out. So I mainly use technical analysis, and I would like to just do a presentation on two or just a few aspects of technical trading. So I think I'm just going to look at the ascending and descending channel because that's what is largely traded. If you look at technical analysis, okay, for me that's what I largely trade. So let me just show you what a descending channel looks like. This is what a descending channel looks like, right? Because it's going what? It's going downwards. That's a descending channel, right? And then an ascending channel, this is what an ascending channel looks like, right? It's called an ascending channel because it's what? It's going upwards, right? So um you would notice that when you're plotting your trend lines, you tend to have these set of channels you know developing as you plot your trend lines, and I'm just going to show you how to take advantage of them. So I think let me just clear that up, clear that. Right. So let's start with the descending channel. Your chart will probably just play out like this: down, up, down, up, down, up. So a descending channel, it's formed by lower highs, lower lows, lower highs, lower lows, and then what? Lower highs. So this is what you call a lower high because it's lower than this point here. This also is a lower high, right? Because it's lower than the previous one. Then another lower high here. Then this one is a lower low. It's a lower low, lower low, lower low. As you can see, lower low. This is lower than this one. This is lower than what the previous low. That's why it's called a lower low, and the opposite, the lower high, right? So that's how the descending channel is actually formed. So let me just create something more that's clear, I guess. Right, this is what you probably see, right? So with technical analysis, let me just put 3. Yeah, it goes up and down, and there we go. So technical analysis, you would see that for you to plot a trend line, you need 3 touches. So that'll be 1, 2, 3 as a straight line. Then you have 1, 2, 3 straight line. So this is what your descending channel will look like. Because why? Because it's going downwards. That's your descending channel, right? So what happens with this one is that the descending channel, when it's forming, it will reach a point when it's now no longer sustainable, and it has to break and go up. Because with this one, with this sort of with the descending channel, what we then will be looking for are trades which are going bullish, which are going upwards. That's what we then need to look out for in terms of our trades, right? So what we wait for is a play out whereby it breaks impulsively, like bullish impulsive candles. Impulsive candles are those long blue or red candles. The long ones. Those are the ones that we need to see when it breaks the trend line for the channel, and it closes, preferably using the 1 hour time frame. it closes above the trend line. So what can happen is that it can come back once it closes below. It can come back, retest, and go up, right? That's what can happen. But also it can break, open a new candle, and move up without retracing, right? So what I like to do is that once it breaks, depending on how far it is broken, because if it breaks and it opens somewhere around here, this one I take the trade just on the open of the new our candle. I take the trade, and our targets for this one will be where the point where where the the descending channel started from. There's a very high chance, high probability that what you will reach the beginning of of that descending channel. So usually this moves very impulsively. This move that comes out from a descending channel, from a channel, it moves out impulsively, and that's when you set your targets, and your targets will be hit, right? But if I was saying in terms of entries, um, if it's close to the what to the trend line, you can take your trade on the hour close or hour open. But if you have a situation probably like this whereby it closes, yeah, this one will be tricky because it's already played out too much into into the area where we wanted to play out. So what you'd have to wait for are corrections. I'll get to that. Then you trade them on the on the continuation. But that's what a descending channel looks like. So um what we can further take advantage of when it comes to descending channels is how it breaks. So as I said, it can break very impulsively. It can break impulsively like that, right? Or it can impulse within the descending channel, correct, then impulse, right? You see, so it's in a situation like this. This is when you can probably take your trade here, and before it even breaks, you can take it into into the descending channel, play out, and trade it like that. But I think basically what's important is that it has broken impulsively. I'll just get into okay, let me just finish it right now. Um, you can break like that, or what would be uh, you know additional confirmation is probably it plays out and creates a head and shoulder pattern. You see the head, shoulder, head, then shoulder here, then it breaks. This is all just additional confirmation of the trade. So what we need is an impulsive trade, and an impulsive break of of the channel, and these patterns, the head and shoulder, the double top, double bottom, these will just be additional additional confirmations to the trade. And you can also find out that you can have a situation whereby, as I mentioned, that correction, another descending channel being formed within that descending channel, and it just works together as as confirmation for the trade. You see, this will be another descending channel. It breaks to the upside. So this is how we trade ascending channels. We're just waiting for those impulsive breaks. So in a situation like this one where it goes up and it forms this descending channel, then goes up, we call this a 1 2 3 formation, whereby it goes up, down, and up. So this will be 1, this will be 2, and this will be 3. So basically these are just wave structures. These are, if you look at your charts, these are um, this is a price action that repeats itself over and over again, because you will see that a trade will impulse, then it will do this, it will correct, move downwards a bit, then go up, move downwards a bit, go up, and whilst it's doing this, it will be forming channels again, and that's what we'll be trading. right? So this is basically what a descending channel would look like, and that's possibly how we can trade it. And